We'll start with page 1, and we'll skip the self-explanatory items. Complete the annuitant and insurer information for both existing and replacement annuity contracts. Enter the contract number for the existing contract and unknown for the application number. Contract issue date. Enter an estimated date for the replacement annuity. I would use 30 days as the default. Generic contract type. The answer, SPDA, SPIA, FPDA, FIA, VA, etc. Marketing name. It's the actual annuity product name. Since the marketing name of the existing policy is generally not shown in the policy itself, if it's unknown, answer with unknown. Initial premium. It's the amount of initial premium for an existing annuity and the total amount of initial premium, including any cash or other transfer exchanges funding the replacement annuity. Qualified contract. Answer yes if the funds are pre-tax funds from a qualified plan such as an IRA or employer-sponsored plan such as a 401k. If the existing contract is qualified, the replacement contract will be also. Annuity maturity date. Answer with either the date or the annuitant's age when the annuity will force a distribution of the funds to the annuity owner. This is not necessarily, and usually isn't, the date of the end of the surrender period. Rather, it's usually an age such as age 95 or 100. This date will be found in the contract of the existing annuity, and companies are working to make this information readily available for the replacement annuity. Death benefit amount. For the replacement annuity, it is most often the initial premium, but may include a premium bonus. If the replacement annuity is an SPIA, or immediate annuity, answer with the period certain length or installment or cash refund if applicable. Otherwise, answer with NA. Change of annuitant upon death available. If it's an owner-driven contract, the answer is most likely yes. If it's annuitant-driven, the answer is most likely no. When the death benefit is paid, determine which drives the contract. First-year surrender charge percentage rate. While I can understand why it should be disclosed for the replacement annuity, it escapes me why it's needed for the existing annuity, but nonetheless it is. Surrender charge schedule for the remaining years. For the existing contract, this is not the charges remaining in the contract. It's surrender charges from year 2 to the end of the surrender charge period. Free withdrawal available. Answer yes or no. For an SPIA, answer with NA. Annual free withdrawal percentage rate. Complete with the percentage available per contract year. If available all years, indicate all years. If after the first year, indicate after year 1. If interest only, answer with interest only. Waiver of surrender charge benefit or similar benefit. If the contract offers nursing home, terminal illness, interest rate bailout, etc., answer yes. If there are no penalty-free surrender triggers, answer no. List limitations, requirements, exclusion of the benefit, such as issued up to a certain age, a limit on the amount available for surrender upon trigger of the benefit, etc. Please note, on the original version of the Disclosure and Comparison of Annuity Contracts form, this section was mistakenly placed under the other section on the bottom of page 1. It has been corrected on the approved alternate version of the Disclosure and Comparison of Annuity Contracts form and is placed here. Minimum guaranteed interest rate. For fixed rate annuities, this will be listed as a percentage, such as 3% in the contract. For fixed indexed annuities, this will most likely be shown as a percentage of premium at a percentage rate, such as 100% of the premium at 2.5%. For SPIAs, the answer is NA. Market value adjustment, also known as an MVA. This can apply to both fixed rate and fixed indexed annuities. Asset fees. For fixed indexed annuities, this could be the annual charge for an optional guaranteed lifetime income rider, but asset fees are more prevalent on variable annuities. These fees include, but are not limited to, M&E, 12B1 fees, etc. If applicable, enter dollars paid, not the percentage. For VAs, we can help determine that amount. Initial bonus percentage or amount. This applies to premium bonuses, not first-year enhanced interest rates. Answer with the percentage. For SPIAs, answer with NA. Potential loss of bonus if exchanged. Answer yes or no. This would generally apply only to bonus amounts vested over the surrender period of the contract or contingent upon required scheduled withdrawals. If there is a loss of bonus upon exchange, answer yes, but it is not necessary to enter the amount of loss. Write in NA for SPIAs. Limits and exclusions for bonuses that may be payable. If there are any restrictions for the bonus to be paid, explain them in this space. For example, the contract has to be annuitized or have scheduled withdrawals. Otherwise, and for SPIAs or SPIAs, answer with NA. Interest rate cap. This would be any cap on an indexing method for a fixed indexed annuity. If it's a fixed indexed annuity without a cap, or a fixed rate annuity, or an SPIA, answer with NA. Participation rate. This would be the participation rate on an indexing method for a fixed indexed annuity. Index type. The financial index used by the insurer to make certain calculations within a fixed indexed annuity contract, such as S&P 500, NASDAQ 100, etc. List all of the indices available in the contract, not just the current index in the existing contract and the initial index in the replacement contract. Administration fees and margins. It's asking for dollars paid, not the percentage. If it's not applicable, answer with NA. Do not leave blank. We are awaiting department clarification on this, but based on company responses, they seem to interpret this to mean a market value adjustment on any fixed annuity, a fee listed as a spread on a fixed indexed annuity, or any fees listed as administration fees on a variable annuity. The other space. Anything relevant to either the existing or replacement annuity not covered in this form. If there is nothing, answer NA or unknown. Do not leave blank. The signature date section. The applicant's signature is the owner's signature. The date is the calendar day the form is completed. If no joint applicant, enter NA for both signature and date. Do not leave blank. Page 2. The top section of this page is completed by you, the producer. Enter the existing contract number, the current annuity value, and the current annuity surrender value. Surrender charges applicable at exchange. Complete with the estimated dollar amount of any surrender charges to be incurred at exchange. If there are no surrender charges, enter 0. Complete this section with an estimated date of surrender. Unless a specific date is requested, it generally takes about a week from application submission to the replacement company for the existing company to receive the request. Print and sign your name, enter your Florida insurance license number, and date with the calendar day of the completion of the form. Have the applicant print their name, sign and date the form, the calendar day of the form completion. If there is no joint applicant, enter NA for the joint annuitant or applicant spaces. Do not leave blank. Page 3. Make sure the applicant reads and understands the explanation of terms on page 3. Again, the applicant's signature is the owner's signature. The date is the calendar day the form is completed. If there's no joint applicant, enter NA for both signature and date. Page 4. Make sure the applicant reads and understands the continued explanation of terms on page 4. Applicant's signature, again, is the owner's signature. The date is the calendar day the form is completed. If there's no joint applicant, enter NA for both signature and date. As you can see, completing this form requires a lot of information gathering. In our continuing effort to provide superior service to our customers, we have created worksheets containing all of the information you need for the replacement annuity. We highly recommend that you contact us whenever you have a fixed annuity sales opportunity. We will provide you with the latest company annuity new business forms, and in the case of an annuity replacement, the current replacement annuity worksheet. One last thing. The replacement regulations require that prior to the execution of a purchase or exchange of an annuity contract resulting from a recommendation to a senior consumer, an agent shall also disclose to the consumer that such a purchase or exchange may have tax consequences, and that the consumer should contact their tax advisor for more information. By the way, Huffman & Associates will not knowingly accept annuity